Hi, I'm Peter Grant, and I would like to try and explain the UK market in 3 slides. So the first slide is all about the long-term UK trends, and it's actually really comes down to, in many ways, supply and demand. The interesting statistic, background statistic, is that since 1983, house prices have risen by 7% per annum over that period, which is a phenomenal sort of steady growth curve, as it were. And that's driven by 2 things. The first thing is that the UK has got a really well documented supply shortage of houses. And that applies to not just houses to buy, but also, in fact, houses to rent. So feel free to go to your own information sources and read all about that. It's a big political issue in the UK, but has been for 23 years that I've been around. And the second driving factor is the fact that we've got a population that's growing rapidly. So the combination of supply shortages and growing demand is the thing that underpins the whole market, as it were. If we turn to the rental market, we'll look at that in a little bit more detail now. The chart here is probably a good way to show the different aspects of the rental market, and students in the sectors we operate in, which tend to be larger regional cities, account for the majority of the market, as it were. And we like the student market, and we like it for several reasons. The first one is that it's a big market and it's a growing market. Universities are all increasing in size, and that's a good driver, as it were. The second thing is that the students themselves are not very price sensitive. It tends to be bank of mum and dad that pay the bills. And they're also very low risk. So we tend to deal with 2nd, 3rd and 4th year students. So fundamentally a group of friends who are staying in a flat, and they're individually responsible for their own rent, but they're also collectively responsible for the rent as a whole. So if one person doesn't pay, then we can pursue all of them to recover the rent. And also behind the scenes, there are guarantors, again, the parents. And so safety in numbers, we have a very good and safe rental income stream coming from the student market. Young professionals are also a great market. Obviously, students graduate and perhaps don't immediately go out and buy a property themselves. They carry on living together. And so that's a really good market, but obviously there's no guarantors there. And then there's the corporate market. That's a great market, but a small market. Tends to make a lot of headlines. We get less involved with families because they're much more price sensitive. And so that is one that is less of a feature with us, as is social housing for reasons of going up the risk curve, if you like. And so we tend to focus on students and young professionals. The third slide I want to look at are property types. And essentially there are 2 types in the UK. There's new build, which tends to have been built over the last few decades. And then there's traditional property, which is, let's say, 50 years old, or anything between 50 years old and 250 years old, and tends to be Victorian, Georgian, etc. And we much prefer the traditional property for a whole bunch of reasons, which we'll see in a minute, but probably 3 standout ones are location, room sizes, which tend to be larger and ceiling heights higher, and the fact that they're just easier to rent. But if you look at all the metrics, including the price per square meter, value increases, etc., then bottom line is that traditional is the one that tends to perform better than new build. So that's the one that we concentrate on. Hopefully that's been a good, albeit brief, insight into the UK market. If you have any questions, then please feel free to ask. I'm delighted to talk you through that further. I look forward to working with you and looking forward to helping you invest.